All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. 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 In this show, we talk about what's happening in the markets and how we're trading them. Today is Tuesday, June 13th. Stocks rally again. The S&P and NASDAQ at the highest levels since April 2022. Inflation data is slowest, coming in at the slowest annual rate since March of 2021. Traders are now betting that the Fed will pause rate hikes, but maybe there's one more in store. Plus, crude oil bounces back, and then there's Tesla with its longest record win streak, or longest win streak on record, that is. Plus, we'll look at our open positions and discuss plans for trading tomorrow's Fed Day. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge, and I'm head coach at Rockwell Trading. Today, I am running the show solo, but I'm usually joined by Rockwell Trading's founder, Marcus Heitkotter. Now, Marcus is okay, but he's on a pretty big road trip with his daughter, one last memorable trip as she finishes high school and moves on to college. So they're having a lot of fun, and he will be popping in from time to time. So you will get a chance to see him, especially when he is in a good place to be broadcasting. Well, even though I am running solo or running the show solo, I promise that you're in good hands. And you could say that at Rockwell Trading, we have a ton of trading experience. We know our stuff and we're not afraid to tell it like it is. So if you're looking for some honest insights into the before we dive in to that, and hey, that happened. God, I apologize. I'm all over the place today, and these markets are crazy. I mean, what the heck is going on? The Fed Schmed, nobody cares. Inflation, okay, that looks all right, and we are in a bull market. Anyway, we jumped to showing our charts here. I have the S&P 500 up, and the S&P 500 is up again, just blowing through that 4,300 level. The NASDAQ seeing its best day. Let's go ahead. Best day in 2.5 weeks yesterday with a 1.5% gain. Right now, up another 0.5%. Let's actually go back to the S&P 500 because if you look at this chart here, let me expand it a little bit. We see that we peaked at record highs end of 2021. I think it was the first trading day of 2022, and then it was all downhill from there. 248 days in a bear market, the longest bear run since 1948. But if we come off of these lows here, we see these lows and we're well above 20%. If we look at the close, here we could see this close back here in October. Using that close, last week we closed above the 20% mark. So coming off of the lowest close and rallying 20%, closing 20% higher after a bear market technically puts you in a bull market now. So the S&P has made this run and it's continuing. 18 months since the S&P peaked and began its drop here. And now, is it all up and away? Well, we'll see. We'll see. But let's first talk about CPI data because that was the focus today. Let's go ahead and look at the economic calendar. Core CPI coming in as expected, up 0.4% last month. And this was actually the lowest level in 2 years here. When we look at the CPI year over year increase of 4%, this came in and ticked lower than the 4.1% and lower than the 4.9% year over year that was seen in the prior month. CPI data itself actually coming in lower than expected. So this came in with a 0.1% increase, a 0.2% increase was expected. Now, this core CPI, it does take out food and energy. And so I do think that this is something that the Fed is definitely keeping an eye on. But traders liking this report here. We could go ahead and look at the Fed funds tool, and Fed funds futures now showing a 93% probability that the Fed will not raise rates and a 6.9% probability that they'll raise a quarter point. So essentially for tomorrow, the market is priced in no hike. And this was all over the place about a month ago. Recently, it started to get closer to, or lean towards no hike, and now it's pretty much a sure thing. And if we look at the probabilities, I think this is what we're going to be keeping an eye on and what traders are really focused on. Is this the end, or will the Fed raise one more time? Right now, based on Fed funds futures and the CME tool here, we see that traders are betting on one more hike taking place in July. So even though a pause at this June meeting, they're betting on one more hike in July, another pause, and then possibly a decline in November, staying the same in December here. But November, really close here with 43.8% saying a drop, 40.4 staying the same. So November, December, maybe a decrease um, the in rates there, and that's what traders are going to focus on. That's what traders are are really going to be keying in on tomorrow when the Fed makes their statement and also during the press conference. So inflation data looking pretty good at this point in time. And actually, let's go over to the heat map here and let's see what's going on in the market. And you see it's all green for the S&P 500. A little red here and there, but nothing significant, mostly green. And this is interesting. I really thought it would be a little more quiet going into uh, this Fed meeting. But from Friday's close to where we're at right now in the S&P 500, you see we're right around 4,300. Now we're up 1.4%. And the 4,400 level now is in sight. So interesting move in the S&P. Looking at the VIX, also known as the Fear Index, tracking S&P 500 options premium. Yesterday, even though markets were higher, the VIX was rising up 8%, more than 8%, pulling back a little bit today on this continued move and maybe a little uncertainty deflating from the uncertainty balloon when you have CPI data looking pretty good. Now, let's look at a few market movers here and then talk about open positions and also what our plans are for tomorrow. Oracle yesterday getting a nice move higher after an analyst upgrade, but today there was a reaction to earnings. Earnings actually coming in better than expected, reporting $1.67 a share versus the 158 estimate. Also better revenue as well. So some of this fueled by the AI craze and Oracle at all-time highs here, opening significantly higher at 123 a share, pulling back a little bit, but still up 2.2%, and just a huge run for Oracle last couple of days. Another market mover, CCL. We talked about this yesterday, but with the boost higher, we also had another analyst raising its target on CCL. Carnival Cruise Lines thinking that cruise line demand is back and looking much better. So cruise lines, or at least Carnival, back at levels not seen since May of last year. Let's also take a look at Apple. Apple making a record high yesterday. So Apple getting up, look at this, closing at 181.27 a share. So nice record close for Apple. And there was a little bit of a dip here pre-market and also at the open after UBS downgraded the stock, citing softer iPhone demand. clawing back some of those losses here, down 0.2%. So we'll see if Apple could get positive for the session, down just a little bit though right now on that downgrade. Another one we could look at, GameStop, GME. GME getting hammered on earnings, but getting right back up to where it was before that earnings drop. Today, up almost 6% and trading at 25.69 a share on news that Chairman Ryan Cohen has disclosed the purchase of 443,000, almost 444,000 shares. That's just shy of $11 million worth of GameStop based on Monday's closing price. So investors liking that. If many times when insiders are buying, that could be viewed as a positive thing. Otherwise, why would they be buying shares? So traders liking that and GameStop reacting. Let's double check Tesla. Oops, let's get the right ticker, TSLA. Tesla, just can this move be stopped? A record win streak for Tesla. Look at this. Last losing day was May 24th. So just a huge rally, putting Tesla back at levels that we haven't seen since October of last year, trading at 254.20 a share as we speak. And interesting move. Actually, it looks like with it being up today, that would be a record win streak. So I think we're at 12 today, would be 13. But either way, flirting with a record here, just a monster rally for Tesla. Looks like investors are liking the idea that Tesla's opening up those charging stations to other electronic vehicles. But Tesla looking pretty solid. Markets overall looking pretty good as we head into the Fed. And let's go ahead and let's take a look at the economic calendar, talk about what's going on tomorrow, how we're trading it, and also our open positions. So we see here that we have tomorrow there's core PPI. CPI data is always going to be a little more significant, but maybe there's a PPI surprise. This can be factored in and taken into consideration with the Fed's two-day policy meeting. But tomorrow is when the fireworks will take place, well, possibly. We have 11 a.m., which would be 2 p.m. Eastern time. We have the federal funds rate, the FOMC economic projections, and the FOMC statement release. Now, as we mentioned earlier, looking at probabilities, no rate hike is priced into the market. So it's not necessarily the Fed's fund decision that is going to be in the spotlight. It's what is said, right? What is the Fed looking at? Are they dovish or hawkish with their statement, right? Dovish leaning more towards easing or, softer stance. Hawkish being a little more aggressive. And this is where the wording is significant, right? Are they going to be committed to focusing on the data? Do they see more hikes? Will they consider another quarter point or even a half point higher? At this point, are they comfortable with where inflation is and what they've done to combat inflation? And is it just a wait and see? We'll have to see what the Fed chooses to say with their statement, but you typically see this reaction at this 11 a.m. Pacific, 2 p.m. Eastern time, and then you also get a reaction to the press conference. So Fed Chair Jerome Powell will have his press conference at 11:30 Pacific, 2:30 Eastern, and we could also get another reaction here. But typically you get this three-part reaction, the first coming on the statement, the second coming on the press conference, and the third coming on the next day. So there could be a lot of volatility here. Right now, traders don't seem to care, but you never know when you're going to get some profit taking. And I would say that at these levels, sure, we can move higher, but a pullback would be healthy, right? A pullback at this point, whether it's a third of this move, getting back here towards 4,300 or even halfway in between, getting back to 4,250, a pullback would be healthy rather than just up, up, and away, because typically the bigger the move higher, the bigger the potential retracement. And right now, the traders don't seem to care, and it's all about the Fed. So, taking a look at open positions, I personally have PNC, and we could take a look here. I have some money to deploy, but I am looking for opportunities where I can sell puts, collect some premium on stocks that are moving nicely in a range, and ideally selling puts at or near support. Right now, we've drifted higher a little bit, so I need some pullbacks to take place. Maybe there's an earnings reaction I could take advantage of. Maybe there's another dip in crude oil, even though crude oil bounced back today. Maybe there's some weakness in crude oil and some oil and gas plays we could consider. Maybe there's a pullback tomorrow after the Fed statement or the press conference, or on Thursday with that third reaction. Right now, my PNC position looking much better than it did mid-May, and PNC is trading at 128.18. My break even is 134.55. I have a cost basis of 136. Now, Marcus, in addition to PNC, he does have CTRA. And CTRA, right now, his cost basis is 26. His break even, I believe, is around 22.50. So he's not in a position where he could sell calls right now. But CTRA bouncing back after yesterday's drop and looking a little better there. So those are really the two in the spotlight for us. Definitely have some buying power to deploy, and looking forward to a reaction tomorrow. I really don't think there's going to be a whole lot to consider pre-Fed statement and press conference, but I do believe that we will have an opportunity in one of those reactions, whether it's a dip on the statement, a dip on the press conference, or maybe some, hey, profit taking. Let's take advantage of this big move higher on Thursday, and looking to get into some new trades. So no new trades for us today. As mentioned yesterday, I think Oxy was something to consider at 57 if you were quick to pull the trigger yesterday morning. But right now, no new trades and waiting for the Fed. So that's going to do it for today's stock market update video. If you like the video, please give it a like. If you're new to the channel, please subscribe so you get notified when we go live and when we have new videos. I'm going to be here tomorrow and looking at more opportunities. We'll talk trading, talk the markets, and see how we are navigating these crazy markets. Until then, happy trading, everybody.